price sitting very close to $92 a barrel. Many are calling $100 a barrel very soon. At the same time, we're seeing unemployment in the US being a sticking point, but we've also seen an increase in demand coming through from the likes of Europe. Clearly, a lot of fundamental factors that are playing a part here. Where do you think oil prices are headed?
I think, the recent increase that we have had comes mainly from the fundamentals, comes from the cold snap, comes from a very high demand that was a little bit underestimated. I don't think that the prices could go to 100 pretty soon. I think that the prices, in fact, should return to the $70 to $80 range over next year. However, in the fourth quarter of 2010 and the first quarter of 2011, we can see some very strong support from oil demand, in particular from the weather. And I think that in these quarters, you can have prices higher than $80 per barrel. But I don't think that they will go to 100.
So are you saying, Christophe, that then that this is just really going to be a short-term movement we're seeing in the oil price above $90 a barrel? Because we also had some inventory numbers out of the US last week. It looks like their inventories have come down a little bit, so also perhaps supporting that oil price.
Yeah, when you look at the inventory number, you're right. Inventory has come down, but over the past 2 weeks, the draw in inventories in the US had stopped. And I think that one of the main factors that explained the drop that we had in US inventory was a strike in France in October that contributed to rebalance the Atlantic basin market. Right now, I think the rebalancing is coming to an end, and we will not get more support from that. So I think that it is very possible that inventory draw in the US should stop now.
Christophe, let's touch on the scenario that's playing out with OPEC. OPEC says it's not going to increase supply at this point. Everything looks healthy. Do you see them changing their stance on this going forward, given the fact that oil prices are at their attractive levels and they keep talking about that $70 to $80 a barrel mark?
I don't think that they would change quota. I think it's very possible that they would start to increase further production in the start of 2011, but I don't think that they would decide to change quota at the next meeting in Ecuador. I think they will just leave quota unchanged, and I think that in fact what can happen is that if more oil is needed from refining, then they will provide this oil. I think the policy now is to meet clients' needs. It's not to change quota.
Christophe, how do you factor China into your outlook for the oil price going forward? Because of course we know China is the second biggest consumer of oil. We're getting inflation numbers out of China in about a week's time. If they are higher than expected, we could see more monetary tightening in China. Do you think that would put downward pressure on the oil price?
Yeah, indeed. China is the main consumer, and China will be the main consumer in the foreseeable future. We have now an increase in total oil demand in China at close to 900 kbd. It's an enormous increase. I think that the Chinese oil demand in recent weeks has been supported by exceptional factors. As you know, they are implementing measures to improve energy efficiency that has led to shortages in electricity supply. And as a result, you have a lot of factories that are using small generators based on diesel to generate electricity, and that factor will come to an end at the end of the year when the measure to increase energy efficiency will be stopped. So I think that you have right now some exceptional demand that will slow in the coming year. However, China will remain, of course, the main contributor to oil demand, and we have an increase of roughly 400 kbd in 2011.
Christophe, that said, do you think that the US perhaps is going to take second place in terms of oil consumption globally? Do you think China is going to take first place? As you mentioned, energy efficiencies are perhaps leading to inefficiencies by using diesel and petrol as well.
Yeah. It is pretty clear that right now those measures will stop having an impact from the start of 2011, and we can expect Chinese oil demand to decline. We had a very strong number for the US too, in fact, and the September data that were released for the US show a stronger than expected increase in demand. So basically, I think that for the third quarter of 2010, now we have estimate of increase in total world oil demand of higher than 3 million barrels per day. It's a very, very large increase in demand, and that explains, I think, what's happening to prices.
Of course, we saw that dollar coming under pressure on Friday, boosting other commodity prices as well. So really, are you taking a longer-term view on the dollar as well when you're making your oil forecasts going into the future? Because commodity prices really are benefiting from that weaker dollar.
I think that in the short term, you can have an impact of the dollar because, of course, you have rebalancing of position of speculators from one market to the other. In the longer term, it's more difficult because the correlation that you have between oil prices and the dollar, sometimes it works, sometimes it doesn't work. And in fact, you have little fundamental justification for the relationship. The only fundamental justification for that would be to say that the weaker dollar makes oil price less expensive for countries that are not linked to the dollar. But these countries, in these countries, the oil consumption is decreasing at a very slow rate. So I'm not sure that the relationship between dollar and oil prices is really solid. I think that it can vanish, in fact.
Christophe, let's touch on the speculation. 147 is what we saw in July, August 2008. Then we saw oil prices plummeting very close to $30 a barrel. To what extent is the oil price driven by speculators? Could you perhaps just give us an indication of what weighting fundamental factors have and the speculation that we see that drives prices going forward?
I think that there is clearly an impact of speculation in the short term. In the longer term, I don't think so. In the longer term, I think that it's a physical market and it's driven by fundamentals. In fact, when you look at the data that were released on what happened during the summer of 2008, when, as you said, prices went to the roof, you can see that looking at the index traders' positions that were released by the CFTC, those index traders, they reduced their position when prices were going to the roof. So we cannot attribute to index investment the fact that prices exploded during the summer of 2008. I think that now you can have some impact of speculators that are changing position from one market to the other, that are rebalancing position, but that would be a short-term impact. In the medium term, I think it's fundamental.